Welcome back, guys, to another episode of Dimitri's Desk. Today is September 17th. This is episode 14, and here is what you should expect for today's episode. As always, we're going to run through TA for BTC, IOST, ETH, EOS. We're going to take a look at the indicators. We're going to see where price action is now and where it might be heading. An interesting day in the market today. As you can see, we have alts popping while BTC is lagging. This is something very different, as we always keep track of BTC dominance against the market cap of all crypto. What does that mean? We're going to discuss that as well. It's a packed episode, so let's roll. All right, per usual, we're going to kick this off with IOST USD daily chart first. As you can see, since the last time we've discussed this, it looks like we're still continuing to move sideways on that price action for IOST USD. We're still not breaking that 0.7 as that mark we've talked about on previous episodes. And we can see that the overall ATR, the volatility indicator, average true range, has been slowing down, which makes sense. As you can see, the range has been consolidating. So we're still within that range that hasn't broken up or down. And we can see that the OBV is moving sideways as well. So not much of price action volatility in IOST USD. We're going to have to wait and see how this is going to play out in the coming days, because as of right now, it looks like we're still trying to decide that next price direction for IOST USD. All right, up next, we got EOS USD. And interesting development here. We obviously had that pop from the $3 mark, or around $3, where we were moving sideways and trying to decide on the next price action direction. Looks like we did get that. We came up from 320 to above $4, about 30%. Great. Now, interesting development here in terms of indicators. The ATR, the volatility indicator, has been going down as well. So the volatility for EOS USD has been going down, and we can see that with these price action candles that we've talked about many times, where we see a bunch of wicks and not meaningful directional push as far as the price goes. Now, in regards to RSI, there's something interesting that you might spot if you go to a 4-hour chart. You can see that overall EOS USD is making highs, while RSI is showing that divergence, as you can see here. Now, this can be indication of a momentum that might not sustain itself on the 4-hour time frame. So we'll have to see how that plays out in terms of upside for EOS USD. But as far as the RSI goes, it looks like the momentum is slowing down. So I'll be very careful in picking it up at these levels. As I mentioned multiple times before, I'm looking forward to seeing EOS above $5 before I start picking entries for long positions. So right now, we're still in that phase where we're not breaking through the major resistance of $5, which will signify a change in our trend, which has been downwards for EOS USD for quite some time. So until we get that, it looks like we're still getting a lot of chop for the candle formation. So be very careful as you're looking at this, as you're trying to pick your entries for long positions, because like I mentioned, there's quite a bit of resistance here, and the buyers have not yet convinced me to jump on this train. Obviously, you know, people are going to say that, hey, you could have picked it up at 320 and picked up that 30%, but I'm not in the business of picking up bottoms and tops, because that's a good way to lose money. ETH USD, I was surprised by this. This was an amazing run that we had these couple days for ETH USD. We broke through that 200 that I've been talking about for quite some time. That was a major resistance, and now it's actually piquing my interest for entries to go long. Now, I mentioned that once we break that 200, I'll be looking for a test of support on 200 before I start getting into long positions, because it looks like we're approaching that another resistance level of 215, and then we have another resistance level of 230. So we're gonna have to see how that price action plays out, but at the moment I wouldn't be buying right at the market at the current price of 212. I'll be looking forward to seeing that come down to 200 to test that support, and then start picking my entries there where the risk reward ratio makes sense. So this is the way I see ETH USD right now. It's interesting to see that the ATR has been going down as well. but it looks like we did get a bump here on a daily basis. So we'll see how this daily candle closes. And RSI, it looks like it's reaching that overbought level, but keep that in mind. The way RSI works, once it's in overbought territory, it can stay overbought for quite some time. As a matter of fact, there's a famous saying, the market can be overbought or oversold longer than you can be solvent. So don't jump on it and start shorting it because it's overbought. The way RSI works is that you're looking for crosses in a trending market. So meaning that if we're changing the trend to the upside, you're looking for a cross below 70, which is the overbought territory, to start picking your entries to the upside. So it looks like ETH USD is something I'm pretty excited about. It's looking solid. I was very impressed with the price action, how quickly it picked up. Kudos to those that took a risk and picked it up at sub 200 levels. Now we'll be looking forward to see how this plays out, and we'll see how far ETH can take it. Obviously, there's fundamental news in play, but we're not going to talk about that because we covered technicals here. And of course, we have BTC USD. Now, I've talked about this and how I was looking forward to seeing the price action to develop to the downside so I can start picking entries to the upside for reversal. Now, looks like we're still within that triangle formation. We're still failing to break up or down out of this consolidation period that we've been having on BTC USD. I mean, since June 26, it looks like ATR is significantly going down. As you can see, the price action is moving sideways. The last time I talked about BTC USD, I talked about how I'm looking forward to a drop, and it looks like that was on September 13th. If you did make that trade, you ended up picking up a little bit of 3.4%. Now, again, we're still within these confined resistance levels. As you can see, we haven't broken out of the descending triangle formation, and we still have these major resistance points that are shaving the price off as the buyers try to take it higher. So right now, the overall trend directional volume and price for BTC USD hasn't made a meaningful move where we can decide the next big move for BTC USD. Is it going to be that 14K, or is it going to be 8K or 9K first? Now, we don't know that until we actually break out of this triangle formation that we have painted here. So at the moment, if you do want to play within this range, you're going to have to respect the levels of resistance and support that we have outlined here and position yourself accordingly with the risk reward ratio that favors your trade. Now, looking at this, it's quite obvious that the short position is more favorable than a long position based on support and resistance levels. Very important thing that I also pointed out on Twitter today is that if you take a look at the weekly candles as we've been looking at on BTC USD, you can see that we've been trying to close above 10.5K on a weekly basis multiple times. As a matter of fact, for 4 weeks, we've been trying to break through 10.5 and close above 10.5, but that has not happened. So it's very important to respect the 10.5 level as being the heavy resistance on a weekly basis. It looks like we're not getting that close. We're getting a lot of wicks, we're getting a lot of pokes at above that level, but not a weekly close, which does not signify a shift in momentum to the upside. So we still have to respect this consolidation, and we'll see how the price is going to play out for BTC USD. As I mentioned again, it is a choppy market conditions, but if you are looking to put on a trade, then it looks like we might be coming down lower before we start heading back up. Now, let's take a look at the BTC dominance against the total market cap excluding Bitcoin. As we've keep track of these charts to take a look and signal to us when the alt season is going to happen. So as we can see, BTC dominance peaked at 72, and we're coming down as the total market cap is getting a bump here. So if you take a look actually overall on a weekly chart, it looks like BTC dominance is down about 2.5%, while the total market cap is up 8.5%. Now, we had these days before, and I spoke about this on previous episodes, where we had a bump in alts and BTC dominance falling. Now, that doesn't necessarily mean that the alt season is right here, right now. We've seen these days before where we have alts going up and BTC retracing or staying relatively the same price. That doesn't necessarily signify an alt season, because as you can see, we need to get a meaningful momentum as far as BTC dominance goes and the total market cap. As a matter of fact, if you take a look, the last time we peaked at 72 was actually, if you zoom out, that was actually on July 3rd, 2017. So as you can see here, we peaked BTC dominance at about 70, and after that we moved significantly down, and we saw a total market cap just boom. So that was a clear sign, obviously, of alt season, and we could see that reflected in the prices for alts. Now that trend has been continuing for quite some time. If you take a look at BTC dominance, it has been falling. It was just essentially what's called a dead cat bounce, where we saw a bounce in BTC dominance and a little bit of a drop off in total market cap, and then we'll continue to go lower. Now on this side, we see that the BTC dominance has been growing significantly. We'll see how far this BTC dominance correction is going to go. Obviously, right now, given the price action in BTC, we might be seeing actually traders rotating into some alts to avoid the choppy market conditions in BTC. It is possible the traders are avoiding to trade BTC at the moment because of that descending triangle formation, and they're waiting for price action to dictate the next move for BTC, and they don't want to front run it and take positions before that, because essentially it comes down to almost like a 50-50 if we're going to break up or down. It is possible that traders are staying on the sidelines and maybe trying to hop some returns and chase that yield in alts in the meantime, while BTC is slowing down in volatility. That's about it for today's episode, guys. Hope you enjoyed. Please leave any comments about the information that you received. What is your opinion? Which way do you think BTC is going to break up or down, and how far will it go within the month or two? And as always, happy trading.